Today I want to go through an example of how, not how to trade options, but how I go through and try to find the best strategy for options. And the easiest one is in the money calls. So just for simplicity, a call option is basically a right for an individual to acquire that equity at the strike price, okay, before the expiration date. So if you buy a call option on a company, one call is equal to 100 shares, okay, and so if you buy, let's say, one call on a company, you basically have a right to buy 100 shares of that company at the strike price. And an option basically has a value and the time value built into it. So for simplicity, in this first example, let's go through this exercise. So let's take Taiwan Semiconductor Manufacturing, okay. So TSMC is one of the largest semiconductor company in the world, and there's a lot of shortage of chips, and you would think that because of chip shortage this company should be going up, but since this chip shortage thing began, this has really started to come down and come back down, and now you can see that the chart is turning bullish. It's starting to turn here at $120 a share. So I want to go in and buy call options on this one, okay, and all I'm going to do is assume that by the end of the year the stock will retest its high of 142. So you're talking about $22 move to the upside. Okay, so what you do is, you on a stock like this, you always go buy in the money calls, okay. Now I'm also going to bet that this stock will stay above the bottom it created, and the bottom it created is around 107 right here. So it's 107. So if I were to buy the stock here, and I want to buy 1,000 shares, I would have to put up $120,000, right? And I would tie in $120,000, and I'm hoping I would be making 20 grand. And on the downside, I can go all the way down to 105. So buying the stock outright, you're tying up a lot of money, and the risk to reward is not that good. You don't have the leverage. So here's what you do. So let's go and look at the stock options. So what I'm doing here is I'm going to January 21, and I'm doing in the money calls, and I'm going to look close to the price is trading at right now, okay. And the first thing that struck me is, there's a lot of volume here. So you could buy the 120 calls, but I think I like either the 100 or the 105, okay. So I like these better than this one. So let's go with the 105, for example, okay. So if you buy 10 calls, it'll cost you $19,500 approximately. Let's say 20 grand, okay. So for 20 grand you can do a January 21 2022 105 calls, okay. So keep that in mind. So you buy you're going to buy 10 calls, strike price of 105 for January 21 2022. So you're basically saying if the stock is 105 and up, so you make profits if it's 105. It'll be 105 plus say $20, so 125. So if the stock is above 125 by January 21st 2022, that's your profit, okay. And you lose money if the stock is below 125. That's basically what it is, okay. So what are the chances? So you're putting up $20,000, and now if the stock goes from 120 to 140, you make 20 grand on a $20,000 investment. So that's 100% profit. You can't go wrong with that, right? So that's how you do the options. A couple of stocks I would like to highlight that I am trading. I own CMLF. I got it into PRQR again, and it's breaking out. Home builders, very volatile and getting slammed to the downside, and I've been accumulating simply because of stupid market. Is there's a lot of YouTube videos and all, and there's a general consensus that home prices are going up too much and they're going to crash, and I think very differently, and I've been buying home builders, and this is right now I'm losing money, but let's see when the fat lady sings. Alright guys.